that the country has announced. But let's go across to Ajay Bodke of Prabhudas, Lilladher and Manoj Muralidharan of Lilladher Securities, who will give us some trading ideas now. Gentlemen, morning to both of you. Ajay, let me start off with you. It was a very good day of trade yesterday. In fact, we saw a lot of buying in blue chip names like HDFC, ICICI Bank, TCS, etc. What would your recommendation be from now until the budget? Do you have any specific stocks that you're recommending to investors?
I think as we look forward to the opening of the next session of Parliament, a lot of expectation build up will start sort of, it is happening sort of. A lot of ordinances that have been promulgated, be it in the insurance sector, in the coal sector, the Land Acquisition Act and the mining sector. The market will be waiting with bated breath about conversion of those ordinances into laws. And the market will be tracking this more than anything else very, very closely, because this will show the government's intent and also its approach in terms of convincing the opposition to go along with on the path of reform that it has set. The budget, of course, is something which is waited again expectantly by all the investors, and we are expecting that medium-term plan, the government will adhere to it. At the same time, we are expecting the government carving out at least a 50 to 70,000 crore worth of budget, specifically aimed at reviving the investment cycle, with specific allocations to sectors like roads, railways, urban infrastructure, irrigation and power. And that, I think, will determine the medium-term trajectory of the market. And this is the revival of infrastructure cycle is what the market is most eagerly awaiting from the government, because of the inability of the banking sector and also of the private sector because of high leverage levels to kickstart the economy.
Okay, actually, even as you speak, we are getting headlines from our Delhi bureau that the cabinet is likely to clear an urban housing improvement scheme called probably the Sardar Patel scheme. This is 2 crore houses by 2022. That would also be a kind of pump priming. After all, housing can have direct impact on cement, bricks and a whole lot of housing materials that go into the construction of houses. So it looks like that's already on the way. Not quite infrastructure, Ajay, as you put it, but yes, housing apparently is on the government's radar. That announcement is just coming as you speak. Also clears incentives for marketing raw sugar. Now, I don't know how much that will help, whether that's even, something that requires marketing, unless they have some export shop over there. We'll have to wait and see. The sugar angle is at the moment a little unclear. Let's get to Manoj, even as those headlines flow, and we will clarify them to you. Manoj, how are you playing the Nifty and the Bank Nifty today?
Good morning, Lata. Lata, I guess, the last time when I was on your show, the Nifty was closer to 8600, and I said, this is a time where there is a lot of risk distribution that is happening, because banking as a sector had seen the huge money coming in, and it is always the difference between the US 10-year and the Indian 10-year that we see somewhere close to 7 level. That is where the Indian debt equity ratio pulls up. So we are somewhere close to 5.6, 5.7 as of now. So, and what has happened is, this is for the first time into this contract of Feb that we have seen put writing happening on a major scale. Let's say 87, 88 and some in the 89 put also, and the combination would be a good 34 to 38 lakhs. And let's say the break even is at the weighted average price for the month, which is at 87.30. So I guess it's a very positive indication. The risk distribution is almost over, and that would, the first indication would be, if you see even yesterday, after the first couple of hours, we have actually seen the banks pull up, and the ratio of the bank is to Nifty was on a positive side. So we are expecting the Nifty has legs all the way to 9,110 maybe, that's on the spot Nifty that we are saying, and the Bank Nifty can easily come towards a 20,000 odd. So we are simply saying by an 8900 call option, we are approaching towards the expiry, and this is the time when you get it much cheap, 70 odd rupees. Keep a stop loss of 30, and that can go all the way to 154. If it is a Bank Nifty, buy at I guess the future is somewhere close to 19,350. You buy between that 50 odd points, 19,300 to 350. Keep a stop loss of somewhere close to 19,000, and we're expecting 19,800 on that.
All right, we'll take a short break. We'll come back and chat some more about these flashes as well as the trading ideas, and we'll be just in time.
Welcome back. Just about 10 seconds for the markets to open, and the futures are indicating a slightly positive opening, not a whole lot. Today we won't have the rupee to lead us. There's a holiday in the money markets. It's Shivaji Jayanti in Mumbai, so markets are closed here, and that's the leading market. So here's the first rates coming in from the Sensex and the Nifty, and both are indicating a mild green tick at this point in time. We'll just concentrate on that in a bit because things take a little while to settle down, and well, at the moment Hindalco is starting with a positive tick. We'll have to wait and see how things pan out. Let's not get into any rates just yet. Ajay, on that note, the bidding for the coal blocks has been aggressive by almost anyone who's watching these very closely, industry leaders as well as investors. What's your own take, and would that change your stock picks in any way?
I think in the metal sector, we don't have currently any top picks. We are basically, advising investors to stay away from the metals names. And insofar as the auctions is concerned, I think, what really stands out is the fact that almost all the eastern states would be gaining around 80,000 crores worth of revenues over 3 decades. So when the government talks about cooperative federalism, I think this is a shining example of how the financial devolution is happening for state governments and how they can tailor the plans to suit their own conditionalities and help revive growth in the part of the country, which really needs to come up in terms of growth and match the northern and the western parts of the country. So I think from the macro perspective, it's extremely positive development that's happening.
All right. Just talking about some more stocks that are in the news, Ajay. The big mover yesterday was Pipavav Defence, and there is talk that perhaps the Munjals might be investing some stake there, or rather buying some stake there. What would your own view be on what one should do with Pipavav Defence, and how would you react to the big fall that we saw in Hero Moto yesterday?
I think we don't cover Pipavav Defence, but in general we are positive on the defence sector and the government's resolve to ensure that a lot of defence manufacturing happens in the country over time. Bharat Forge figures among our top picks. Its largest forging company, also one of the strong contenders in the defence orders that will roll out in the next 3 to 5 years. We still feel there is tremendous value in Bharat Forge, and would recommend investors to have it as a part of the core portfolio.
Well,
Hero Motors,
yeah,
Hero
please.
Motors is concerned, in case of Hero Motors is concerned, our preference still continues to remain with Maruti Suzuki and Tata Motors along with Ashok Leyland, because we feel that the first green shoots in terms of revival in mining are clearly visible. The commentaries, if you see from companies like Cummins in the conference call or some of the other capital goods companies, clearly mentions mining as one sector where they are seeing green shoots. And once the mining activity picks up, I think the demand for MCVs and HCVs will pick up with a lag effect. And hence we feel that Ashok Leyland, which is a pure commercial vehicles play, I think offers an extremely good opportunity with a medium-term perspective. And it's among top buys with a target price of 79 rupees. We are penciling in a top line growth of 29% in the current year, followed by 25% in next financial year, and a very strong bottom line growth both in this year and next financial year. Tata Motors also figures among our top picks, and I would urge investors to look at these stocks from medium-term perspective.
Okay. I just come back to you with more questions, Ajay. But Manoj, you have Asian Paints, Adani and Kane in your list among the big boys.
Right. Lata, we're just trying to see which sectors have actually drawn in money, because as you're saying, if there is a risk which is distributed, it gets accumulated in other sector, and that is where you nullify the value at risk which happens in the sector. So yes, power, cement and telecom as a sector in the last 3 to 4 odd session, we are seeing good value buying happening. And to top the list, I guess Adani Power would be a buy from our side. 51.7 odd is what the future is, 49.8 as a stop loss. We're expecting 56 in that. Ambuja is excellent. I guess even last week it was a buy, but still there is a momentum. There is still a good upside of 6 to 8 odd %, somewhere close to 269 is what the future is trading. You can buy that. The stop loss should be 245, and we're expecting that to go all the way to 94. Asian Paints, after a lot of correction, we have seen some bottom fishing which is happening, and yes, there is good accumulation with a positive cost of carry, and we expect that to outperform. It's a good stock, even for a swing trade, but as of now I'm giving it for a trading call. It's somewhere close to 820. We keep buy that with a stop loss 807, and we're expecting close to around 846 on that.
All right.
And Kane would be the last. I can go out with that, Lilladher.
Go ahead, Manoj.
Yes, it's 257. Even yesterday, if you see, there is good volume accumulation which has happened, and that has happened more precisely towards the VWAP of the month for the stock. So currently it is 257. It's a buy from our side. The stop loss should be 245, and we're expecting the move to go all the way to 290 on that as well.
Thanks a lot for joining us with all those picks, Manoj. We have to welcome Mr. Subramaniam, the CFO of Titan Company. He joins us on the phone line to give us his view on what the Reserve Bank announced yesterday. Mr. Subramaniam, that 80-20 rule was anyway done away with in November. What's changed yesterday?
Well, let's see. Yesterday was more of a clarification on the credit side. It wasn't so much on the 80-20 as you mentioned yourself. The curbs on the import of gold were removed. However, there was an issue on credit on gold imports for domestic consumption. There was some lack of clarity in the previous circular, and I think that is what we've now got with this RBI circular, which essentially means that gold on loan, gold metal loan is now available for domestic consumption, and that can be authorized by domestic banks.
Okay. So how does life change for you? You get it cheaper?
Yes, in a way, yes. We were getting it some time back also. The RBI had liberalized import credit gold loan credit for some of the from some of the banks, some 4-5 banks. Now I think they have basically lifted off for everybody. So it should make life easier. We were actually getting a lot of credit over the last 6-7 months. So
Okay.
So it doesn't change too much, but it makes things much more clearer, and hopefully the uncertainty on this aspect is closed now.
Can you quantify that for us a bit? I mean, how much will your funding costs come down, and how will this improve the liquidity situation?
There are two things in the funding cost. One is the funding cost would be down to around what the gold metal loans are. This ranges between 3.5% to about 4-5%, or maybe even more for some of the other players, as against the normal bank rate of around 10% or so on. So that is one aspect. But however, we have been saying this, that even though at some point we were borrowing in the market, because of our hedging internationally, our net cost was not any different from what these costs were. So on a PBT basis, I don't think we had a big impact. But on a funding line item, yes. But the most important thing here is hedging becomes much easier. It's a natural hedge is back, and that is the most welcome development from this.
All right, Mr. Subramaniam, we'll leave it at that. Thank you very much for joining us and explaining what the difference has, what difference the RBI circular has made to you. We were speaking with Ajay Bodke as well, so a few more questions to you, Ajay. Before the budget, what would you top up on?
What I think I would, I'm expecting, sometime after budget, and it could even be before the next policy announcement, the RBI governor sort of, announcing a rate cut, and hence first among a series of rate cuts, because we are expecting the government to continue with its commitment to fiscal consolidation, and also ensuring that the quality of consolidation is good. So from that perspective, there are 2 or 3 broad themes, Lata, that we would like investors to look at. One is obviously the interest rate sensitives, and hence autos would figure there. As I mentioned, Maruti Suzuki, Tata Motors, Motherson Sumi and Bharat Forge would form, and Ashok Leyland would form part of our core portfolio there. We would also like to look at some of the cement names. You mentioned about the mass housing scheme, the multiplier effect that it could have on names like Ultratech Cement, where we are expecting a target price of 3,700 over a medium-term perspective, and JK Lakshmi Cement, we are expecting a large volume growth and a target price of around 475 with a medium-term perspective, would form part of our core portfolio. we would also be looking at banking sector. And here I'd like to dwell for a minute because we have seen a savage 25 to 30% cut from the top in case of many public sector banks because of the poor earnings as well as the outlook that it will be at least good 1 quarter more before the NPAs they get over the hump in the NPAs. At the same time, the private sector banks have been flat or up around 10% in last 1 month. So the sheer difference in terms of the valuation gap that has opened up for a company like BOI, for instance, is trading at 0.5 times price to book. Its book value is 437 rupees as per our analyst. Similarly, Union Bank trading at 0.5 times, price of around 178, book value of 344, or PNB at 0.7 times. Whereas the private sector banks today are trading between say 2.5 times, say for an ICICI Bank, to around 4.2 times for IndusInd Bank. So at some point, I think the market will take note that the reaction has been excessive. There is value in some of these PSU names. Maybe they might not run immediately, but certainly from a value investor's perspective, I think we all know that interest rates are going to come up by 75 to 100 basis points. They are going to gain on their investment book. If the economy does pick up with the revival investment cycle, the credit growth also should pick up. So I think there is excessive pessimism that is getting built in. And if you recollect on your own program, before the results, I had cautioned you that PSU banks might be posting numbers which will disappoint the market, and hence there is a need to chop off, top slice, or get out among some of the weaker ones. But now I think the reaction has been excessive, and from medium-term perspective, one ought to not discount them completely.
All right, we leave it at that. Thanks, Ajay, for joining us and talking about all those recommendations.